Frankly, I'm a little bit surprised in the way that this next part works. I suppose that the reason that we do it is we're about to talk in the terms that the non-finance person would talk, which is holding period returns. We don't usually talk that way in finance because we know the nuances of the math. But holding period returns would be something like your aunt coming up and saying, "Oh, grandma just died, we have to sell her house. She bought it for $20,000 and now we're selling it for $80,000. We made 4 times our original investment. We made 600% return." Well, those things are accurate, Auntie, but what they didn't tell you is you bought the house in 1907, and now it's 2017. It's 110 years later. Like, you're not factoring in for the change in time. But a lot of the world speaks to that, so we'll speak of that in terms of holding period returns. So holding period return problem would look something like this. You bought a bond 1 year ago for $825. It pays an $80 annual coupon. 1 year later, you sold it for $950. What is your holding period return? Also abbreviated by HPR. Now notice what we can do to the timeline in our step 2 to augment this problem to show that it's a little bit different. First and foremost, price is going to be price, and what we're going to call this is our buy price. So what was the price at which you were able to buy the security to begin with will be that cash flow out at period 0. Face we're going to change to sell price because this is the price at which you were able to sell it later. Maturity date is no longer important to us. Rate of return as an alternative is no longer important to us. What will be important, though, will be any cash flows we receive along the way, which generally is going to be equal to the amount of the coupon payment multiplied by however many of periods that you held for. So when we put together HPR as a formula, it really is going to look like this. Sell price minus buy price. And if we anchor on just that term, sell price minus buy price, when we look at this, what we think of sell price and buy price as being are capital gains is what we call it. So here in here, we call that capital gains. It just means how well you did as an investor on the buying and selling component. That's important because when you pay taxes, you pay a special tax rate for capital gains. Versus the second piece that an investor receives would be the cash flows. As we indicated down here, cash flows would be equal to the amount of cash that came in to you as the benefit of being a shareholder. In our case, coupon payments. That's significant because eventually when you do taxes, that's taxed as interest income, which is taxed at a separate rate from capital gains. So that's part of why we parse it out. The first piece says, how good are you as a trader? The second piece said, what type of recipient were you as an investor? And we divide that all by the buy price, which we think of as our initial investment, or the amount of money it took us to get started on purchasing. So if we take a look at this problem, our buy price was $825, and our coupon was the $80, and our sell price was the $950. Those are the 3 inputs that we need. If we wanted to put it on a timeline, it would look something like this. But because we're not going to use Excel's built-in formulas, but rather we're just going to use simple algebra, it's not quite as necessary as it was in the past to recognize them as pluses and minuses. it's simply critical to notate these are the three variables that will go into this formula. So if we wanted to calculate holding period returns, we would take the sell price minus the buy price. So in this case, you can see we gained about $125 as investors in change in price, plus our coupon, which then we would have to multiply by however many times we received the coupon. Well, we paid an annual coupon. We sold a year later, so we got one of them. So it's really multiplied by 1, which is superfluous, but we can include it. All divided then by the original buy price of $825 tells us that our holding period rate of return for this particular security was approximately 24.85%.